I have, I think, what is Netflix too, and we talked about this before, where things are so good they're bad. This is Micron technology, and this spread over the tuna today is the biggest it's ever had, and it's a love fest. People are talking about that it's no longer cyclical, and I just point to this and the SMH. The SMH is hitting new highs, but the volume's anemic. It's a very feeble rally. So I would, people are talking about the Intel win rate of 9 straight days or something like that. I would just, if you're in semiconductors, I would start to be sharpening the pencil, fading it, hedging it. It looks like it's overdone and is due for correction. When we said this about, or I said this about Netflix, I'm doing this from memory. I think it was 130 or so, and went down to the 80s and 70s. So when things get so overdone that they become uh, you know stretched over the tuna day excessively, you tend to see a reversion to the mean, and I think we're kind of there right now with MU.
I agree.
Mike,
I agree with that. I agree with that. I like that position.
yeah, thanks. Nvidia can't get out of its own way when it blows apart earnings, so I just think that and this whole software stinks and semiconductors are great. A heavy asset, low obsolescence is the way to go. I think I think that trade is in the eighth inning or so.
I
Yeah,
totally agree with that.
and that's
And
kind
like
of
that's
interesting.
what it comes back to, that Bitcoin thing. IGV, which is a software expanded tech, trades exactly like long IGV, short SMH seems like a trade to me.
Yeah.
Where like, I mean, everybody and their mother is like crowded into that SMH. I mean, I don't think it can get more length than it has right now. So,
Yeah.
Kevin, I mean, Nvidia is a good point, right? It's back at 191. It's whatever. It hasn't done anything in 6 months.
Yeah, super interesting.
As
I
we
think it's
talked
really
on
interesting
the
because it's
earnings
kind of
day, they obliterated every line that anybody cared about on their earnings call, and the stock was down. And so when you do that, it's just a sign that everybody expects more from you, and you can't deliver, even the upside, even the guidance, and the buyers are satiated, and it's just time to go to do something else. And there's always something to do.
There is always something to do. I think that's right, and I guess that is what my point is that there's stuff that's been absolutely taken to the wood chipper, whereas like this stuff just sitting at the highs with the same narrative, which is starting to have some cracks, and not going into that. But yeah, I'm with Kevin on this.
yeah, chasing things that have done well. If it's early and it's a massive cycle, or if it's an innovative company that's invented something, that's one thing. But if you're making what's essentially a commodity and your sector is hot, I don't know. I never chase things like that. That's just not
I
worth
mean,
it.
you're on year 23, 24, 25. We're in year 4 of it. I mean, it's a long time that this stuff is at. I mean, it's a long run. Like, to expect another 4 years is just a really tall ask.
Yep.
And the Bulls will say, "Oh, well, now it's cheap because it was at 70 earnings when it broke out, and now it's at 25 times forward or whatever the number is, something like that." And I go, "That's why valuation doesn't help you, in my opinion, most of the time." So
Yeah,
I just,
DRAM is like the memory. So Micron and SanDisk and Samsung and SK Hynix, they're like, oh, it's like 4 times earnings. Well, I think if you talk to any cyclical analyst, guys
yeah,
who covered steel or something, they'll tell you that when something looks cheap as cyclical is not cheap, and when it looks expensive, it's not expensive. So I think that you got to think about these things like cyclicals, not like secular growth stories.
All right. Kevin, did you
I
have
got one
anything
more.
else for us? All
I
right.
got
What do
one
we
more.
have? What do you have?
I just want to give a tip of the hat to Charlie Peabody. This is Citigroup. They just announced earnings. Everybody else that has announced so far, Goldman Sachs, J.P. Morgan, I think Bank of America did. they were down on earnings, and here's Citigroup hitting new highs on 47% above average volume. He's been talking about this from since the high 40s. So here we are with a triple in Citigroup, and my number that I've mentioned to him 100 times, and you poor folks 100 times, is 140. I can't draw the line, but if you go back here to this break of the great financial crisis, this is a decent place for it to take a pause. So we're here at 127, and if one can't, Charlie or anybody else come up with a rationale why they should stick around for these $13, which is not, I could be wrong, but if the bull case is all evident and obvious now, then it might be time to exit stage left, Snagglepuss. So, but it's just been a huge and consistent call for 2 years.
Good. I'd like your flash look at WFC at Wells Fargo. So down 7% today, which I don't know if I've seen a money center bank down.
Okay, this is it, and we talked about this on a show with the other. This is it in microcosm. I talked about it. Charlie talked about it. That people were genuflecting to Jamie Dimon and J.P. Morgan and Wells Fargo. They don't genuflect to. But look at the difference in these charts. I wish I could put them on the same page. But Citigroup hits new highs and Wells Fargo breaks down after the death cross and on big volume. So Charlie's been really good on this and made money for our members, and I think it's fantastic.
Yeah, I get that, but my question is, what's the next stop for Wells Fargo?
I'm going to say, I'm so vain.
I want to be clear. I want to be clear to everyone listening.
$74.
I'm not saying anything about
74 is a decent stopping point.
All right.
74 is my number. So $6.
Right.
But that's a chart that as I'm going through them, I'm not stopping on this chart.
All right. Sounds bad.